Hello, everyone. It is my pleasure to have the head of quantitative strategies at Seeking Alpha, Stephen Kress, on our channel as a guest once again. For those that may not know Steve is one who actually invented and built the famous Seeking Alpha quant system that are used by thousands and thousands of investors nowadays. And I'm sure that many of you watching this interview may have used Seeking Alpha's quant system and have benefited from the system's analysis when, searching for stocks to invest in.
Pleasure to be here. Thank you for having me, Drew.
Right. So, Steve, I know we were supposed to have this interview a month ago when you launched that amazing article on your top AI stocks, but it seems like you analyzed approximately 147 companies and narrowed it down to your top 10 AI stocks. So, during this interview, I really would love to hear the process and how you narrowed more than 147 companies down to just 10. And if you can share and actually show us the process on how you analyze these stocks on the Seeking Alpha platform.
To make sure that I had a good pool of securities, I went to four of the largest AI ETFs. And what I did is I uploaded those companies from those ETFs into my portfolio tool. Once it was in the portfolio tool, I then rely on my quant system to separate the strong companies from the weak companies based on those underlying metrics. And that's how I came up with my list of top 10. And I actually expanded it out a little bit more. What I'd like to do, sometimes a picture is worth 1,000 words. So I'm going to share my screen. We had a list of top 10 stocks, but there were some major players that people, wanted included in it. So we decided to sort of expand it out to 13. I have all the AI stocks loaded here from the ETFs, and you could load up your own personal holdings. So you could load up, 3 stocks, 5 stocks, 10 stocks, or you could load up the entire S&P 500 and take a look at what the quant rating is on it. So this is the list of all the AI stocks, and you can see that we have the quant ratings there. You can also take a look at the actual rating page, and I'm going to click on that, and you can see what the valuation grades are, the growth grades, profitability, momentum, and EPS revisions. And what's really important about these grades is that they're sector relative. So you're not looking at Meta just sort of in this absolute value term. You're actually looking at Meta compared from a valuation perspective to all the other IT stocks. When you look at its growth grade, you're looking at it versus the other IT stocks. This shows you a chart of the stock, and you can see the performance of the stock actually just by clicking over here. So this will show you what the year-to-date performance is for CAT, and that's up 14%. And you can see the stock has actually done fairly well since June. So it looks like our quant rating has panned out. And the Seeking Alpha analysts, we show the consensus rating there, and the Wall Street consensus rating, both are hold. When you take a look at valuation, you could see how many metrics we actually look at. And from a valuation standpoint on CAT, the overall grade is C minus, but on the conventional underlying metrics, which contribute to that overall grade, you can see it actually looks pretty good. It's the PE on a GAAP basis is a B minus, and on a forward basis, it's a B. And we show what the absolute data point is as well. So you can actually see the forward PE for CAT is 13 and a half times versus the sector median at 17 and a half times. So CAT's actually at a 22% discount to the sector. So from my standpoint, from a PE basis, the stock actually is pretty cheap versus the sector. Where it gets a little bit pricier is on price to sales and price to book. It's a little bit richer. But we're taking a look at all of these underlying metrics to come up with that overall valuation grade. And from a quant perspective, what we want when we do a ranking on stocks is we identify stocks that are collectively strong on the basis of value, growth, profitability, momentum, and EPS revisions. And the ones that have the best scores for all of these investment characteristics would get the strong buy rating. If we scroll down a little bit more, you could see that CAT is number 17 out of 656 in the industrial sector. But within its industry, its closer peers, it's actually 1 out of 42. Say you are interested actually in saying, okay, who's number 1 in the sector? All you have to do is click on the rank area, and this will display the industrial stocks, of which Caterpillar is. And you're going to see come up momentarily. There it is. The ratings, the quant ratings for all the stocks in the industrial sector. And we rank it. You can see going down in descending order of what our buys are. So on the top of the list is Veritiv, Pal Industries, Ultralife, Matrix. And as you scroll down, you'll see CAT is number 17. So I'm going to go back to the list here. And one thing that I want to click on is to show you the performance of these stocks. And you can see these are our highest rated ones. And when I click on the performance, it's going to follow those stocks and the performance. And you can see year to date, the performance on many of these stocks has been very strong. The point of the article was to buy the dip, and that is exactly what's really happened. Meta and Supermicro have continued to do well over the last month, but many of the other stocks have pulled back where we were focused.
I think this is really helpful, especially for someone who doesn't know how to kind of use Seeking Alpha. Another question that I had was, it seems like you're narrowing down the stocks that are rated the highest based on the quant system. And I kind of get the idea that you're narrowing a portfolio where you want to get, buy more and keep that as your core AI stocks. But from this portfolio, if the rating or the recommendation goes to a lower number or maybe an indication for the sell, would you then follow that ranking?
Yeah. So if I saw the quant drop down to sell or a strong sell, that's the guidance from our quant system. And what it's telling you is that perhaps it's, overvalued or, earnings are being revised down. And compared to the rest of the sector, it does not look attractive. So that's how that directional sell recommendation would appear.
I guess based on the colors, whether it's green, yellow, or red, it kind of indicates buy, hold, or sell. But I think this is amazing, or it's really fascinating because a lot of people, including myself, if we have a stock that we're interested in, we look at the 10Ks, 10Qs, and then we go to chart analysis looking at, I look at like 8 indicators and make the decision to buy or sell. But you're saying that this quant system, we don't even have to go to the charts, and it's actually analyzing the numbers and giving you the actual, I would say, not recommendation, but the suggestion based on the numbers that the company is providing.
Well, we could say it does have a rating, and the rating, it's a data-driven process where for each company, it's comparing the metrics for that company to the median for the exact metrics for other companies in the sector. We look at historical data. We also look at forward data. I'm going to click on growth. And what I mean by forward data is we're looking at the consensus estimates from analysts that cover this stock, and we're bringing them into the model. So whether it's for revenue estimates or EBITDA estimates or earnings per share estimates, we're bringing those into this model. Again, the consensus. So we're looking at historical data and forward data. And the forward data, it incorporates in essence, what the future thought is on the company by analysts that cover it. So in terms of charts, we don't look at charts per se, but what we do look at is momentum. And it's one of the most important factors to look at. And a lot of people don't know that. They don't even think of momentum as a factor, but this is sort of the price activity on the stock. We look at it on a 3-month basis, 6-month basis, 9-month, and 1 year. And again, this is a sector relative grade 2, and it shows that Supermicro has outperformed its sector across the board during those different time periods, and that gets a score from us. So again, it's very predictable in terms of the future when you use this as a metric.
Steve, I think this was amazing, and there was so much topics. And I think this was a great meeting where people who wanted to be involved with Seeking Alpha but didn't know, this is a great guidance on how you could actually put your portfolio and look at the numbers, what the quant system means. Again, thank you very much for your time today.
My pleasure.
I would love to have you on our channel again and again. And the more we kind of want to learn, I think you're the guy that we should invite on our channel.
Well, thank you for having me, and good luck with investing out there.
All right. Thank you very much, Steve.
Thanks. Take care.